Joining us now is Win Thin, the head of emerging market strategy at Brown Brothers Harriman. Win, great to have you with us. And as U.S. investors, we take a look at these currency issues, and we think, is there a contagion transmission mechanism to the United States? Is there?
Well, I think that's where the good news is. At this point, there is not. And I'd say that I even downplaying the idea of contagion within EM. The reason I say that, you look at the 5 worst performers currencies this year. Argentina, Turkey, Brazil, South Africa, Russia, they all have a huge amount of baggage that's very much idiosyncratic to themselves. As Seema pointed out, political risk, economic risk. On the other hand, you have other countries, especially in Asia, Malaysia, Thailand, Taiwan, who are holding up pretty well. So to me, yeah, we're in a bear market for EM. There's no doubt about that. But the bear market is being focused on the countries that have the worst fundamentals. So if you have any kind of warts out there, they're going to be found, the market's going to pound you. But if you have your house in order, things are going okay, then you'll hold up relatively well.
In terms of China's move just this week, I want to say, this week is flying by, in order to sort of prop up its currency, support its currency, does that help the emerging markets vastly, the fact that China has stepped in and supported its own currency?
Yes, that was taken positively, but of course, it really didn't last much more than a little speed bump. China was basically sending a signal that they're not actively seeking a weaker yuan. They don't want any sort of unintended consequences. So I think it was a good move on their part. But again, I go back to this whole overall global backdrop for EM. We're talking about rising U.S. interest rates, trade tensions, and as you mentioned, a slowdown in China. So these are all, to me, negative factors for emerging markets, and that's really why we've really been in a bear market since the end of March.
And collectively, does this add up to a definitively stronger dollar by year-end? Where do you think we could see that dollar index?
Well, I think with the Fed is continuing to hike rates. They're 100% pretty much priced in that they hiked in September. 2/3 priced, I think, that they're going to do again in December. So the pressure to take the dollar higher remains. So my view is that the strong dollar story will go into 2019. To me, the game changer, and it's anyone's guess, but the game changer to me is when the U.S. goes into recession. That could be in late 2019. Some people are saying 2020. We don't know. But that's when things could change, because then the Fed will be able to cut rates aggressively. We may have some budget deficit blowouts, so things will get a little dicey for the dollar.